Your supplier's goal is often to minimize its waste. So make sure that you have multiple suppliers. Waste sorting, if you harness AI with robots, you can make this sorting much more precise, efficient, and cost-effective. The first question is, what do they do currently with this waste? The second is, what's the pain point with this waste stream? And are you providing a suitable solution? Beware of the regulation. Yes, it's helping, but we've seen too many examples of regulations not being enforced, and overnight, your business model becomes more or less pointless.
Guillaume, welcome to the show. It's a pleasure to have you here. Today, I'd love to dive into a few different topics. The first thing is about your experience at Innovafeed. Obviously, you've started quite a successful company. I want to talk about circularity at ECBF and how you invest into startups, how you see the risk, how you assess opportunities, what are the timeline, the scale, everything that goes into your mental model to think about the startups. And then I also want to talk briefly about the future of circularity as well.
Sure.
Sounds like a good agenda to you?
Yeah, perfect.
So you co-founded a company called Innovafeed. It's a biotech company that became one of the leading insect protein producer. You raised 55 million. You built 2 factories, scaled to over 60 people. How do you think that journey affects you as an investor today when you look at companies?
So the company since then have grown much further and raised much more money. But still, the learnings are the same for me. First, it gives you a lot of humility. When now I'm on the other side of the table, I know how demanding it is. And I mean, last week I was at a board meeting from one of our portfolio company. And one of the representative of our co-investor didn't show up because it turns out that he decided to jump on the other side and take a CEO role for one of the portfolio company of this fund. And my first thought was, great. And at the same time, I hope he knows what he's doing, because it's not the same job, much more demanding. And I know that from my own experience. The second thing is, I think it brings a lot of first positive impression whenever you are talking with an entrepreneur, and that helps also to win deals on competitive rounds. There is some kind of trust, some kind of empathy that goes along. And the last thing is, I think it gives some more acumen to identify bullshit or fake it until you make it. And I think I have maybe a little tip here. It's, if as an entrepreneur you're kind of faking something during a fundraising round, just make sure that either you actually make it when it becomes verifiable, or that it doesn't become verifiable before the closing of the round, so that you are never in a situation to be confronted with whatever you said.
And do you think that every entrepreneur has some sort of bullshit as part of what they're saying? I mean, I guess to some extent you could argue that your job as an entrepreneur, especially early stage, is to tell a story that's compelling enough to convince people. Within that story, what's, according to you, the degree of reality and that you need to prove and to really showcase a reality versus selling a dream and sometimes maybe some bullshit as well, right?
I mean, it's totally fine, because most of the stakeholder that you are talking to as an entrepreneur, they don't realize how fast can thing be. Especially customers at large corporates, they cannot believe that today you don't have this product, but maybe in 2 months you have it. So it's fine to say it because it's actually true that maybe not in 2 months, but actually in 3 months, you really have it. Whereas for them, it would be impossible to think about. So that's fine for me.
And when we think about winning deals, do you think that really helps that you're a former entrepreneur? Do you think like founders look up to you as someone that was quite successful? Obviously, as you said, the company is still going on and doing quite well. So would you say that entrepreneurs look up to you and ask for more advice? And is that also an edge that you have on other VCs?
It's an edge, but again, you have to come up with humility. So you're not going to position yourself as like a successful guy or whatever. That doesn't work.
Makes sense. Well, look, Guillaume, today's topic is circularity. That's why we're here. We want to talk about circularity, which is one of the topics that you look at very closely from an investment perspective. Um, Before this episode, I did a bit of research, contacted a few investors that I knew in the circular economy, and I asked them, okay, what's your definition? And then everybody came up with a different definition. And I was like, okay, Guillaume, I must start with this. What is your definition of circularity?
So I'll say the circular economy is not a new concept. So we are not going to reinvent the wheel, basically. I would stick to the one from the Ellen MacArthur Foundation, which is I think it says a circular economy is a system where a material never becomes a waste and never gets discarded, for instance. And I think that's nice way to put it. Of course, as VCs, we may take some aspects with more focus versus other ones.
Interesting. Yeah, I do have the definition in front of me, so I'll read it out loud. But it says a circular economy is a system where materials never become waste and nature is regenerated. In a circular economy, products and materials are kept in circulation through processes like maintenance, reuse, refurbishment, remanufacture, recycling, and composting. The circular economy tackles climate change and other global challenges like biodiversity loss, waste and pollution by decoupling economic activity from the consumption of finite resources, which I think is quite an interesting description of circularity. When we look at this definition, something that's interesting for me is it says maintenance, reuse, refurbishment, remanufacture, recycling, and composting. Where do you think is the opportunity within that from a VC perspective?
It depends a lot on the sectors. Generally speaking, at ECBF, we quite like the 3R approach, which is reduce, reuse, and recycle, which is kind of a condensed version of everything what you said. And there is a ranking actually between these three words from an environmental impact perspective, but it quite well correlates with an also an economical approach. So it's generally speaking easier to go with a reduce approach to generate cost savings as opposed to a recycle approach where you need to first of all have a reverse logistics and some cost incurred to transform this kind of waste or byproducts into new materials.
When we think about reduce, an interesting concept from a VC perspective, right? Because if you tell that to the software guys from the early 2000s and you tell them, I want to invest in a company that's going to reduce something, whatever that is, right?
Mhm.
Um, they were the guys that were expecting massive growth and let's do more and more and more. How do we think about reduce from an investment perspective?
I mean, it's often do more with less. Let's take this company called Kerio from Luxembourg, and they have a technology that allows to improve the mechanical properties of plastic. And because it has better properties, you need less of this plastic. So you can do lightweighting in packaging, which means in the end you have less plastic consumed, less waste. And that's for me one of the core of the circular economy because you from the start you cut the resource consumption so you have a clear impact from an environmental perspective, and at the same time it's quite easy to sell to your customer because of course he's buying less raw material.
So reduce comes from the input, not the output. Is that the way you put it?
That's one way, and there are also examples of course where you reduce the output. Yeah, that's also true.
One thing that's quite particular about how you invest is obviously you're mostly a growth stage fund? What exactly when exactly do you invest? Like from which stage to which stage?
We like to say we invest in Series A onwards, even though I think the definition of a Series A quite varies. For us, what matters is that the revenue model needs to be demonstrated. So you have revenues, and they are not from R&D projects. Typically, we were talking in September with a company which is providing an architect solution for food farmers. And in their revenue model, there is this fee per box of fruits that they want to get from their customer on top of selling the product, perceiving a royalty on each of the box of fruits that they are going to sell. For us, that's great on paper, but we want to see at least a contract that shows acceptance from the customer. Same in packaging, company hoping to get a license fee for every item that the customer would produce with their technology. Fine. But when you know that, or you notice that the percentage fee that they are expecting is 4 times higher than the standard in the industry, you want to see first a customer that is actually paying this amount before believing into it.
If we try to describe a typical company in which you invest, what's the revenue size? Do they make any margin yet? How many people are in the team? How much money have they raised? Like, is there like a kind of benchmark that we can start with?
Yeah, so they have raised several millions already. Um, the revenues are also in the multi-millions range. Number of FTE, to be honest, no, I don't really care about that. So it's, yeah. And then on the margin, positive gross margin, of course, EBITDA margin, no.
So if we go back to circularity with that context in mind, um, what are the type of models that come to you at Series A and onwards that are in that multi-million revenue range, positive on the gross margin, um, and that come to you for investment? What do they look like, and in which industry are they a part of?
It's super diverse. So you have food tech companies. I'm thinking about this UK-based company called Winov. They do food waste reduction, super advanced ARR, nice growth. This is typically a case where we could invest. In the construction industry, you can think about refurbishment companies. So refurbishing is kind of retrofitting buildings. That's totally a circular economy. There are also a couple of examples with resource consumption reduction in the construction industry. You can think about Nanogenes. It's a Swiss-based company. They have technical innovation to increase the crystallization of cement. And doing so, you need less cement to get the same mechanical properties in concrete. When you know that the construction industry is the number one industry for resource consumption in Europe, it's quite easy to understand that this can have a massive impact on resource consumption.
And when we think about this model, let's pick the example of the UK companies that you mentioned on food waste reduction. Um, One of the things I was wondering before this episode is where does a competitive advantage comes from? Because for a lot of companies I've seen so far, the technology is not the part that would make the company more interesting than another one, but the access to the resource and the distribution of the product is what makes it interesting. Do you have the same view on circular startups in general?
I mean, it depends, of course, on the business model. So indeed, for Winov, maybe there is no scientific innovation. Will be the same for Nornorm, this Swedish company that raised quite a massive round recently. Their concept is office furniture as a service. I mean, they didn't invent any furniture, of course. So it's all about the model. And beyond a certain point, your edge is the network, the size that you have reached. like in any network. If you think about Airbnb, that they didn't invent really something from a scientific point of view, but still they have a huge edge because of the network. I think it's pretty much the same. And then there are some companies like the Nanogens and the Kerio that I named already, where there is a real technology with patents behind, and here the edge is more about the scientific expertise.
So that probably means that on the first example, traditional VCs would come in and play as well because it's a typical network effects uh, and distribution play and not really a climate slash scientific play, right?
Yeah, in the end, for some deals, usual VCs or traditional VCs could come and play with us, and that's fine. In the end, we are also seeking for market standard
Mm.
financial returns. So that's pretty expected that in the end we could target the same startups. The difference is we also measure the company's performance based on impact, and we kind of we can encourage them and help them on that path, and we will not change our mind if we see that there is at some point some kind of a hard decision between growth, business growth, and impact. So we'll try always to find a solution to do both, where some traditional VCs may not share exactly the same values as the founders.
Do you think that circular startups are always positively impacting the world?
I mean, if it's a proper model, I do believe so. Else, they may not qualify as a startup from the circular economy.
Okay, interesting. I'm trying to think because it's such an interesting model, and I wonder if you could turn it around and do something bad with it. But anyways, that's not why we're here. When we think about the circular economy, I feel like it has had some hype. We were talking about it before this episode, like around 2022. Some companies were having crazy valuation. What's your take on price diligence as a VC? You were a founder before, so you know what it's like to sell part of your company, and you obviously want to get the majority of the shares for the best price possible, right? So, what's your take on price diligence?
So, I mean, from a founder's perspective, it's quite logical to try to maximize the valuation. What I think went crazy in the 2022, 2023 years is more on the VC side, with people losing their minds and being able to pay valuation that were totally disconnected from the maturity of the company. And we've seen a lot of these hype deals. We passed them, and we don't regret any of them. Not only because I mean we were convinced that the valuation were unjustified, but also because we see them coming back nowadays for those that survived, and we can now have either more justified entry points because in between they have burnt a couple of millions or dozens of millions into maturing their technology or scaling up their production. And for others, they even come up with down rounds. And this is where we can get in and find nice entry points. And I mean that's how the system works. We are fine not to be considered as one of the hype investor. We much prefer to do good deals. And in the end, I believe this is what the LPs will look at.
What's a good deal?
I mean, it's very simple. It has to bring the financial return and the impact performance. Huh? So that's very simple. And in the end, it can be a lot of different startup archetypes.
Um, but when we think about, if we go back to circularity, one of the things that I find interesting is in circular startup, you basically need to build an entire ecosystem and lock in resources from different third parties. Do you think that makes companies more resilient when you're a circular startup, and therefore you have to have this ecosystem around you to be able to work?
I mean, not necessarily, and it can be one of the difficulty if you have to handle a complex supply chain. So on the upstream side, as a circular startup, you may rely on the output from other players for which this particular side stream or waste is not that strategic. So they may neglect it, or the quality of it may fluctuate. And even more, and that's something I've learned from Innovafeed, um, your supplier's goal is often to minimize its waste. And that's pretty much logical. So if you rely on that particular stream, you may expect that over the years, these streams will fade away. Um, so you better make sure that you have multiple suppliers just to make sure that you have the volume, and even better if you can be flexible with the streams that you are taking. That's really hard, actually, huh? Because if you want to scale, you need to standardize. If you want to have industrial operations, you need to have a super standardized stream, and that's not super good fit with flexibility usually. So it's not something easy.
How do you assess that as a VC when you look at companies um, that use waste as a resource and as an input into their business? As you said, if you're a supplier, usually you just want to reduce the waste. You don't, obviously, it's great to have someone that does something with it and makes money, and that also makes you money, right? But at the end of the day, you're probably aiming to zero waste, right? Like, so how do you assess these companies and how do you look at the supply chain for them?
The first question is, what do they do currently with this waste? Um, there are a lot of things that are actually already reused, and the people who are currently using it may need to find a solution, or maybe willing to pay more in the future just to keep that stream. So that's the first thing to consider. What's the impact of you taking this stream away from the current value chain? Um, the second is, what's the pain point with this waste stream, and are you providing a suitable solution? Typically, if the supplier is currently paying to get rid of that waste stream, that's a good starting point, because you can probably secure this waste for free, and then that can transform. I mean, that can be an edge for your own cost basis.
When we think about building a circular startup, where should you start? Because if I listen to you now, I might just say, okay, I found a free source of input. I don't know, like a farmer has leftover of vegetables that are not sold. Um, do I just say, okay, I see this waste, it's not being valued by anyone, I'll just take it and build a business?
I would say that's usually the wrong approach. Um, Actually, it has to be market driven. So it's fine if you get the ideas because you've seen this waste that was not taken care of. But a lot of founders come up with an approach where it's okay. I have identified this waste stream, and I want to solve that problem. And that's actually your supplier's problem. What you need to solve is a customer problem. It's exactly the same when you compare like a tech push versus a market pull. Having a waste stream push is probably the wrong approach. So you need to make sure that immediately after having the idea, you go on the market, you go with customer, and you try to identify if you are really solving an issue for customers and if they are ready to pay for it. If this is confirmed, then you can, okay, build your supply chain with the suppliers.
Interesting. So circular startups should work as normal startups, basically. That's what you're saying.
In the end, we are investing in businesses. And that's also what set us apart from a foundation, for instance. And the approach we have is, of course, much more business driven, because we believe also the impact that any circular startup will get is correlated to its turnover and business impact. So it has to go hand in hand.
Yeah, financial value and impact go together for sure. Um, so you mentioned one of the bottleneck, which is, or one of the, I guess, failing points for entrepreneurs in the circular economy, which is starting from the waste and trying to find value and finding customers from there. What are the other key bottlenecks you see as startups are trying to scale? So when they come to you, they already have product market fit, they know their customer. What are the pain points from there?
Um, a lot of companies that have deep tech innovation in this field, they need some capex to scale up the production, and that's a very common bottleneck. Not just in circular economy, in a lot of industrial ventures, and it's a very hard one. I don't have a solution for this one. You can try to do toll manufacturing. It has also some flaws because the costs are higher, but it could be a good temporary solution. Mm. So, but that's a very common bottleneck. I would say the other one is related to regulation. That's something we did not discuss so far today. Um, Regulation is a bit of a double-edged sword. You can build an entire business model based on a regulation that is about to come in force, and overnight there is a change, there is a delay, and your business model becomes more or less pointless. So beware of the regulation. Yes, it's helping. Yes, it can shape the market, but we've seen too many examples of regulations in Europe in the end not being enforced or being watered down at the last minute.
Do you have any examples of that?
Yeah. So look at what's happening with thermic cars. They were supposed to be banned over the coming years, and this is not going to happen, or this is going to be delayed a lot. The sustainability disclosure, all the companies were supposed to disclose their impact, and now the scope of this regulation has been restricted to only very large corporates. And there are many other examples like this. Even talking about a topic that I know super well, it's the packaging and packaging waste regulation. It's voted. It's about to come in force in the coming months, like this summer 26. But there are already rumors that maybe there will be delays. Because, there are some measures that are very hard to implement for the industry. And of course, there is lobby against it. So, um, it's it's actually not easy for founders. It's not easy for investors to rely on regulation, and I would be even more cautious in the future. So my standpoint is, I think we've passed the peak of pro environmental regulation in Europe. So you have to expect more of these delays in the future, and the reasons are, at global level. So the regulation is not progressing. If you see what's happening in the US, and at European level, um, the urgency is to fix our economies. There is mountains of debt in all of the major countries. So um, the priority will be to uh, enable faster economical growth, and sometimes, not always. From a company's perspective, from a corporate perspective, these environmental regulations are perceived as a hurdle for economical growth, and governments listen to this. So this is going to persist. Also, if you look at the political landscape, if you look at all the parties that are progressing in Europe in the later years, they are all, maybe not all, but a lot of them are with, let's say, climate sceptic positions. I do not believe that Europeans are climate sceptic. If you look at the polls, it's less than 10%. But the number of people who votes for parties that are climate skeptic is much higher.
Mm.
Doesn't mean that they are voting for these parties because they are climate skeptic. They are voting for other reasons. But in the end, these parties may come into power. If you think about Germany, if you think about France, so UK the same. So the regulation will again be not in favor of the environment.
So do I understand correctly that if a company comes to you and say, "Here's my business," and within the business you can identify clearly that it's based on one regulation in Europe, you will pass on the deal?
If it relies entirely on it, most likely,
Mm.
indeed, and that's terrible. But that's pragmatic view. We know we are investing for the next 5 to 10 years, so we know that there will be a lot of changes.
Yeah, that makes sense. Something you said that I find interesting is you said that basically Europe right now is trying to optimize for economic growth. That's basically the main topic, and to make sure economies are working again and we reduce the amount of debt that we have. Um, is that compatible with circular startups? Meaning, if you are the head of Europe, and it's a very difficult question to answer, but if you are the head of Europe tomorrow, do you think you should push more in favor of circular startups because they unlock more economic growth?
Um, if you are solving a problem from a customer perspective, I think there is a path. So definitely, there is a lot of opportunities in the circular economy. We just need to be smart about identifying them. Make sure that you are not, for instance, reducing convenience for customer, or you're not claiming for a green premium, because these are super hard to secure. So it has to be solutions that are easy to adopt and with very limited additional cost. As a, I mean, you are asking also a question like if I would be in the European Commission. I think there is also considerations in strategic autonomy with circularity. So there is critical raw materials that we don't have in Europe, that we desperately need for our industry, for the electrification, for defense, for hospitals, health devices. We need these materials. We don't have them. At least we don't have the mines opened yet. So there is a clear opportunity to try to recover and recycle as much of these materials that are already in circulation. And this is typically circular economy models.
So you're basically saying if I buy a battery from China and it arrives in Europe, it better stays in Europe with all of the materials that we will reuse for something else.
Exactly. I mean, you're exactly putting the finger on it. So China controls most of the rare earth. They control like 2/3 of the graphite. Other countries that you may not be willing to rely upon, like Congo, they control 70% of the cobalt that you need for these EV batteries. So it's much better if we can try to have our strategic autonomy here, which goes several ways. So first of all, is diversification from sourcing from different geographies, but also see if we can recover
Mm,
these materials.
makes a lot of sense. Um, let's go back a bit closer to startups. So although I think it's very interesting to put it into context as to what Europe is trying to do right now. Before this episode, I was chatting with Nick Gorini, that you probably know from Spin VC,
Yeah.
early stage fund, doing circular economy investments. So they're probably a good friend of you because they bring you deal flow, I would assume. But um, when chatting with Nick, I asked him about circularity, and one of the things he said is circularity is not a goal; it's a means to an end. Do you share that vision?
Yeah, I think it's in the end a different way of saying, the same about you have to solve a market problem. huh? It starts with that. So if you are really bringing a solution to a problem for which customers are willing to pay, yes, there is definitely a path.
Um, when we were preparing this episode, one of the things you said is you're particularly interested in digital solutions as part of the circular economy. How do you look at digital solutions for very much of a physical problem when we think about circularity, right? Like when we think about circularity, it's about using waste to produce something, like it's a waste to value model.
Mhm.
Um, the waste is usually something quite physical. So, how do you think about software and digital solution in that context?
When you think about AI, we are just at the beginning of it, so the possibilities are endless, and we cannot still anticipate all of them. But still, a very tangible one with waste sorting, which is a real bottleneck for the circular economy because of the it's such a low added value task that if you have to hire humans to do it, it's the economical model doesn't fly. Typically, if you harness AI with robots, you can make this sorting much more precise, efficient, and cost effective. And there are already a couple of players in Europe. Grey Parrot is probably one of the leading one in the UK, using AI to identify the materials of each of the waste items and then sort them with robots. So you have to, in the end, plug these digital enablers with hardware to come up with an effective solution.
Yeah, so it's if you think about circularity as a circle, you have multiple places within that circle where software can play. Obviously, it remains something quite physical, but you have to simplify some of these tasks.
Mhm.
Is that the way you see it?
Yeah, simplifying, making them more cost effective. I think it's super important in all the reverse logistic chain. That is a usual hard part of the circular economy. But you can think also about pure digital solutions to improve traceability and sometimes also to enable then reuse models. In the textile industry, you have Carbon Fact, you have Fairly Made, and many other platforms that allows to have full traceability, know where materials come from, and all the digital product passports is also something that will be tech enabled.
Why is traceability important when we think about the circular economy?
I think traceability is very much related to quality. And for secondary materials, ensuring that you have a high level of quality is really tricky. I mean, for virgin materials, because of the linear value chain, sometimes it's easier to know what's exactly in there. Whereas for secondary materials, especially post-consumer, it's hard to know exactly what's in there. It's often mixed. There might be contamination. So knowing what's in there is even more important, because else you come up with a secondary material that has a lower quality versus the virgin one, and that's not what you want.
Is that something you look at specifically when an entrepreneur comes and pitch his startup about the circular economy? Do you look specifically at are you able to trace the materials and where they're coming from?
Yes, definitely. I mean, we are an impact fund. So for us, it's super important to know where the materials are coming from. If it comes from biomass, we like from wood, we ask for FSC certificates. We ask for, because we don't want to also, contribute to deforestation or whatsoever. So we do look at it.
You mentioned the reverse logistic, which is quite an interesting topic when we think about circularity because um, it often means moving large quantity of material from a place where it was not supposed to move, right? Like, so if we think about the linear economy, you have a supplier of raw materials, and they are willing from the get go to just send it somewhere else because that's their business. When we think about circularity, it's not quite the same story because a supplier that has wasted materials just want to put it somewhere and not care about it, but it's not really trying to sell it to anyone. So, how do you think about reverse logistic in the context of circular economy? Because I think that's kind of it almost feels like to me a make or break for startups. Like you could fail completely your business if you don't manage to lower the cost of that reverse logistics system.
Indeed, you have to look what's the existing situation for value chains, because even though they are linear today, it doesn't mean they are lean. They are often very complex. Often, there is transnational shipments coming from Asia or wherever. So transportation is not always very cheap. It has a cost. And so if you do, for instance, reshoring, sometimes there is some savings with less transportation. There is definitely also savings from a GHG perspective, but also economic savings. So this can help to balance the model.
Mm.
But of course, it has to be checked that it's not more costly, because else you start with disadvantage.
One other topic for today, and that's where you will lead me wherever you want, because I know less about the topic, is closed loop systems. Before this episode, you were talking about it, and you said, okay, like a lot of people get it wrong. So I want to ask you first, very naively, like what is a closed loop system?
It's typically a system where a given product, an item, is going to be reused. So not recycled, not transformed, but really reused as such. So you can think about cups, for instance. You could think about furniture. I mentioned Nornorm earlier on. So, I mean, renting is typically a closed loop system, but you now have more like open loop system, or where the product goes much further away, or you don't have full visibility of where it goes until you take it back.
Mm.
So I think these are the new closed loop systems. And yeah, to make them successful, you have to make sure that the collection is quite easy, and that you collect enough of it. Like the collection rate is sufficient. These are super important metrics for your economical assessment, but also for the environmental assessment. Because if there is too much leakage, in the end, you are also in some sort of a hybrid linear and circular model, which is not necessarily super beneficial.
How do you solve for that as an entrepreneur? Like trying to increase retention rate? I don't know if that's the perfect word for it, but trying to reduce the leakage at least.
You cannot really count on people who have no incentive to do it, or even to do it well. So either you are able to give some kind of a reward, or it has to be a penalty, but usually the reward works better. And typically, what works well is when there is someone in charge. And usually in B2B models, it's a bit easier. Volumes at stake may be more significant, as opposed to a single cup, for instance. Here that's the hardest, because whatever reward you are able to put in place is going to be in a few cents amount, so it's not a clear incentive. And you easily conflict with convenience. So I think it's slightly easier for B2B than for B2C.
And that's where I guess regulation comes in as a great incentive, either to give a penalty to people that are not doing it, or to, the other way around, to reward those that are doing it, right?
Yeah, regulation plays a role, but again, I think it's often more limited,
Mm.
because it's also how is it going to be enforced? Are they going to give penalties to people, oftentimes it's not realistic. So even if it's written somewhere on a regulation, it doesn't mean that it's
Mm.
going to be enforced.
Yeah, there's a system that I very much like in the Nordics where there's an incentive actually to collect last bottles, for example,
Mhm.
where you get some sort of money if you like you collect them, you put them in usually like the places where you can give them away are in supermarkets, so people will just collect many of them. Put it in the machine and then get some money back. That is a system that seems to be working quite well because obviously people want to make money.
Yeah, yeah, exactly. And to be honest, it's a wonderful system. It's a bit of a pity that we got rid of it in
Yeah.
France many years ago, but it still works very well in the Nordics, in Germany as well. So it's yeah, it's a good model.
One of the other question I had for you today is I think the circular economy sometimes is a bit contrarian in the way that if we think about plastic, for example, your parents probably have told you many times that plastic is bad for the planet and blah, blah, blah. But then I think part of that story is that it used to be that plastics were used only once. Um, do you think you can build circular models around, I would say, I would say materials that are seen by the public as bad for the environment?
We discussed briefly about the retention rate, so which is the number of time your item is going to be reused in a closed loop system. And if you reach a certain number of cycle, and it differs whether it's about glass or plastic or metal packaging, but there is a certain point beyond which it is more sustainable to use these kind of materials as opposed to whatever single-use material. Okay, so I think it should be always driven by the science in the end
Mm.
to assess whether something is sustainable or not. Once that's said, whenever you can replace plastic by a material that is also super recyclable, like fiber based, paper based solution, then I think you should try to do it. It's not always easy to replace plastic with paper-based or fiber-based solution because as packagings, they have also their own limitation when it comes to barrier properties. So performance will be in the end the criteria that defines if you can substitute or not.
But look, we're getting toward the end of this episode, and I think I want to get a bit of your outlook for the future. What does the circular economy looks like 10 years from now?
I think it becomes much more mainstream. And today, the trend may not be super into sustainability, into circularity, and I'm quite blunt about it as well. And I've been in this episode, but I truly believe that in the end, the problem of the climate change will remain, and people are witnessing it every day with the climate change, with the fires, with the droughts. So it's there and it's going to be even more present in our day-to-day lives. So I do believe that the sustainability topic is going to be a thing for the next 10 years for sure. And even if there are near-term doubts or headwinds, we are investing for the long term. Like the investments we do in the next 3, 5 years are going to be exits in the next 8, 10 years. And by then, I'm sure that the sustainability will again be something super central.
Are you optimistic about the future?
Yes, I think for the circular economy, I'm optimistic. I think there are a lot of reasons to be pessimistic for other topics, but at least on the circularity, I believe that there is a bright future ahead.
Great. Well, couple of last questions for today, but one that I thought about, which I think was quite fun to ask. But do you have like a wish list of startups, so like areas that you have looked at already, and you said, okay, I wish someone was building this in the circular economy?
That's quite a hard one. There are areas where I would like to make investments in molded fiber for packaging, in wood-based construction, But so far, I haven't found the ideal investment target for multiple reasons. I hope I see more of AI-based models applied to circularity. This is really something that I would value a lot.
Well, founders, if you're listening to this, you know what to do. Well, one last question for you today. Where can we find you online? So, if I'm a founder, I have an AI-based company for circularity, I want to reach out to you. What's the best way?
Pretty easy. I think you can share my email address. My LinkedIn is Guillaume Gras, so you can find me. And I'm here in Paris, also very approachable for a coffee or whatever.
Great. And also, if you need an introduction, please reach out to me. It'll be a pleasure for me to introduce you to Guillaume. Um, and then one last question, which is for everyone. Who's the next climate VC that I should interview?
So I remember you talked recently with Nick Gorini, who is more early stage than ECBF on the circularity. Next time, I would be happy to see more late stage investors such as Eurazeo. I know they are also active in not necessarily in circularity, but they have some sustainability ventures. So that would be super interesting for me to see, like even later stage investors.
For sure. They're most of the time quite busy, but I'll ask again. Listeners, if you like this episode and if you like the show, don't forget to like, comment, and subscribe if you're on YouTube, or to give us a follow and a 5-star review on Apple Podcasts and Spotify. If you want Guillaume's information, it will be in the description, link to ECBF website and to his LinkedIn profile. And Guillaume, it was a pleasure. Thank you so much.
Same. Thanks a lot for the interview.